Well, good afternoon, traders. It is the 15th of May today. My name is Thomas T. Ryan, and I haven't done one of these videos in a long time, so I hope this is helpful to you. We're still at it. We're having a little bit of a difficult year because we felt that, as a lot of people did, the market was going to go south, and it didn't. It, of course, took off amazingly. So we've had we've had to play catch up since about, I don't know, February or March or so, which we've pretty much managed to do, but we're still down slightly and not in the green yet for the year. But it's only May, and we are beginning to see maybe some of the effects of this overbought market here in the last few days, having some big sell-offs. Anyway, I thought I'd use this as an opportunity to visit with you about some of the things in general that I have learned over 10 years in trading this market. Okay, there we go. So the question I have is, why are you doing this? It is amazingly easy to get distracted and get lost in all kinds of other unimportant things when you are sitting at your trading terminal trying to figure out what to do with this market. There's only one answer to this. That's I'm here to make money. And you don't ever want to forget that. I'm here to make money. So this probably is obvious to a lot of people who have been trading the market. You can understand what happens on a day-to-day basis. But if you're just starting out, this will sound like a really simple, stupid thing. But you will find out eventually it's really easy to get distracted. So if you're not a software engineer, at least not if you're trying to be a profitable trader, the answer is don't get distracted by the technology. It does not have the answers. It only has suggestions, and it will not make you a better trader. So the corollary to number one of getting distracted is, you can get distracted by all kinds of things. Of course, probably the news is the number one thing that distracts a lot of people. Unless you are intraday trading gaps, and trying to trade on the news specifically and doing it every day, don't pay a lot of attention to the news. The news will become obvious to you when you're looking at a chart. When a stock jumps all over the place, there's some kind of news going on, takeovers or earnings or whatever. If that's not what you're doing, which is not what we do, we swing trade, then what we want to do is pay attention only to some other things that are coming up here, and we're not going to get distracted by news stories or what's going on in the world in general. I think the last few days have been particularly interesting. If you followed our letter, you saw that I think it was on Thursday or Friday of last week. Actually, it wasn't. It was like a week ago. We started pointing to the Dow as being in a rising wedge, a very bearish signal. And it was a very clear rising wedge. It did not break exactly when we thought. It went on for another 2 or 3 days afterwards. But, as technical swing traders, we will tell you that this market broke down over the last several days because of this bear formation that was coming on. Now, you could say, was that happening because a lot of people knew that Trump was getting ready to pull all of this trade stuff with China, and that was going to cause a lot of worries? You could say that, but I think that this bear formation, this bear rising wedge, started quite before Trump got into the China trade issues that he's in now. And of course, everybody immediately started saying, oh, it's Trump. Oh, it's the China trade issues. That's what's causing this off. We would tell you that, no, what you had was you had buyers leaving. They're gone. There were no more greater fools to buy into this unbelievable market. And that became apparent in declining volume, declining range, and what forms up as a rising bearish wedge, which then broke out and collapsed pretty big time. The other thing that's interesting, if you want to go back, and I'm happy to send this to you if you want to, ask me for it, I'll send you the the chart. Well, maybe I'll put it in tomorrow's letter if you want to sign up for a free trial. So the other interesting thing is that if you know these patterns and you study this stuff a little bit, you'll find that we also marked where the market is about today, or it was yesterday, where it was, how far this sell-off was going to go. These are well-known factors of technical analysts, and it worked out exactly that way. So the sell-off went exactly as far as the widest width of the bottom of the bear rising wedge. It went there, it stopped, hung out for a day or two, and today it's bouncing again. It bounced yesterday, and then it sort of fades a little bit, but it's bouncing up again today. So it wants to bounce off this point as support. So I'm getting I'm getting distracted now too. So I don't want to get distracted. But the point of the matter is, don't get distracted by news and what your next door neighbor is telling you, and certainly don't get distracted by the technology and the software. And I'm telling you this because I was completely guilty of this. My first 2 years of trading with TC2000, which is phenomenal software. It's easy for you. And of course, all the broker packages have all this unbelievable stuff of, just a million things you can draw in your charts and indicators and all this stuff. Very easy to think that you're going to find the magic bullet in all of this stuff and it's going to make you a rich guy. The answers are not there. So let's move on to some more stuff here. So number 3, fear and greed are your worst enemies. When you feel them coming on, stop. Rethink what you're doing. So, that old saying that Warren Buffett came out with, be greedy when others are fearful, be fearful when others are greedy. Greed and fear will cause you to do things which are not rational, which do not reflect the underlying indications of the marketplace itself or of a particular stock. And so if you think you're being greedy, you're taking too big of a position, you're jumping in too early, you're getting out too early, taking profits too early. Those are all greed. Some of them could be fear too. You're afraid, it looks like, I think the market's going to fall. I think the stock's going to fall. No, pay close attention to exactly what things are doing. Make sure you have stops in place and then stay focused on those two things and stay away from fear and greed. Always trade with the trend. Always. Picking tops and bottoms against the trend is a fool's errand, and it will produce poor win rates and poor profit factors. Always. Number 1, you're here to make money. And I say that you're here to make money because I'm not here to overthink the market. I'm not here to be smarter than the market. I'm here to trade with the trend. The trend is going to tell me what to do, and I'm going to stick with that. I'm going to look for opportunities on that trend. And when I follow some of the other things I'm going to say here in a minute, you'll be in much better shape than trying to outthink the market and trade, be smarter than the market. So don't forecast the market. That's number 6. Read the market, anticipate the market, be prepared, but never forecast. If you try and forecast the market, you are on a fool's errand again. The market will make itself clear to you most of the time, not all the time. But if you're paying attention and you know the patterns and you read the signals, you're going to have good odds. You're going to have mostly successful, or at least, up there in the maybe 60% range, which is a pretty good number. It surprises a lot of people. If you can be 60, 70% right, you're doing great. And so forecasting the market is it's definitely not the right thing to do. Don't try and forecast it. Just pay attention to what it's doing, what it's telling you. Be prepared for what you think it might do, but don't act on it until it does it. Number 6, don't try. Oh, I say that? Yeah, I did. Wait a minute. Where did I go? Did I miss one? Yeah, trade. Always trade with the market. Right. 70% and 90% of stocks will move with the market on any given day. The others are special situations that you can't predict and mostly you can't trade. Trying to trade them is greed at work. If the market is not moving, don't force the trades. So I think we're covering all this stuff. Don't forecast the market. We already covered that. Number 7 from Paul Tudor Jones, ABMR. Always be managing risk. No one is right 100% of the time. Most are only right 50 to 70% of the time. Right? If anyone was right 100% of the time, they would be a money machine. There's no such thing. Therefore, you must accept loss. Know your real risk tolerance. Accept loss and know your real risk tolerance. If you get nervous losing $50 on a trade, then lower your position size. If you get nervous losing $500 on a trade, lower your position size. Paul Tudor Jones, one of the greatest traders of all times, also says he always likes to size down to the sleeping level. Go down to the risk level where you feel comfortable. Be ready to accept risk, accept loss, and make sure that those losses are comfortable for you. If they are, then you'll be able to stay in trades longer. You'll be able to get out of them easier. It's the only way to go. Trying to remove all risk is a fool's errand. Trends will continue. Did I miss one again? No. Trends will continue much longer than you think. That means opportunities take longer. Trades will last longer. And don't overtrade. If you're uncertain, do nothing. So trends will continue longer than you think. That means it's going to take longer for them to set up, longer for you to get in at the right time, and they will last longer than you think. The tendency, again, greed and fear at work. You're getting too greedy if you're moving in too early. You're getting too fearful if you're moving out too early. The trend will probably continue longer than you think, but that's why you have managed stops. Number 9. Indicators are interesting and sometimes helpful confirmation, but nothing replaces trend, price, and volume. Trend, price, and volume. Trade with the trend, trade with the market, get in at the right price, watch what the price is doing. Price action is everything, and volume is everything. When you see volume coming in, that means others are getting in there with you. When you see volume diminishing, something's about to turn. Those are the things to watch. Good trading, everybody. Thanks for watching.